All right, traders, I'm going to be doing a simple price action analysis on the SPY. This is going to prepare you to trade and scalp the best setups at the best prices heading into this week. Make sure you subscribe to the channel to stay further up to date with these updates. Let's get right into it. So first things first, we are in a wide range. We are in a very wide range. So in terms of the SPY, I want to point out our key make it or break it levels heading into this week. We're going to start off with the overall resistance. So in terms of the resistance and in terms of the high end of the micro, the short-term channel, as you could see, we have some resistance right here at 369 with a nice quick drop to 363, and then we have more major resistance right here at the exact high end of this micro channel, which has lasted for about 2 days now at $371.20. Those are going to be our key make it or break it resistance levels. So if you see it struggling, if you see it faking out in between this resistance zone right here, we will be on track to see a rug pull to 364. If 364 were to crack, we will be on track to see a gap fill play to $357.63. In terms of support, you can see you have very, very strong support right here at this 357 level. It likes to quickly rip to 361 to 361 off of that support level. If it were to crack, then you are looking at further downside potential, as you could see right here. Now, we do have a gap to fill below. SPY ended up gapping up today. There's a gap to fill below at 357.63. You have a lot of strong support heading into Friday extended hours and also Thursday extended hours trading session at this 356 to 357 zone. And we have a gap to fill there as well. So things to be aware of: if we see strong resistance, if it is struggling to break out, if it is struggling to form support towards the upper high end of these micro resistance level channels, then we will be on track to crack to 364. If 364 cracks, we'll be on track to see a gap fill play this week at 357, which would be your best level to consider scalping call options if you were looking to buy the dip and not a breakout or bailout trader. It would be at this 357.63. And the max risk on that would be like 356. And if you get stopped out, I would look to buy the dip towards 348 to 350. That would be the next dip buying zone if you were interested in buying the dip on calls, right? So in terms of like how we're kind of looking right now, it looks like it overall wants to go a little bit higher. So I want to see how it reacts at this 371.20. You know, if we're looking weak at open and it's looking bearish at this 371 like this, where it just rejects the pre-market highs. So wherever the pre-market high is going to be tomorrow, if you see it forming lower highs, if you see it having fake pumps, if you see it faking out, if you see it rejecting the pre-market high tomorrow, then the best play would be put options. If it's looking weak in the morning and rejecting the pre-market high, something like this, a quick fake pump, and then it rejects, forms lower highs, turns previous support into resistance, starts to break below, and then the previous closing price. So just be aware of this pattern. The previous closing price is going to be our overall key make it or break it level for trend direction heading into tomorrow. It's going to be right here at $366.82. So we're going to draw a line there as well. So 366.82 is going to be make it or break it. So if that line starts to crack and reacts as a resistance, for example, right here, this is the previous closing price, it cracks, pumps back up, reacts as a resistance. Super bearish day. Gonna start to fill the gap, gonna hit at least 364, which is make it or break support level, next key support level, right? If it bombs at 364, then it rips back up the previous closing price. If previous closing price 366.82 reacts as a resistance level, then it will continue to get crushed and try to crack 364, right? So pay attention to all of those key levels. Pay attention to the 369 to 371. Pay attention to the previous closing price. That's going to help to determine the overall trend direction for the day, 366.82. And pay attention to the gap fill level for the call zone heading into tomorrow, right? So some theories, if we're looking bearish, if we're forming the double top, if it's forming lower highs towards the market open, and we start to top out at this 371 to 360, to 369 zone, we should see a test of the previous closing price. If it hits the previous closing price and goes, green to red and starts forming resistance, forming lower highs, we will see a continued drop. It will likely, once it drops, bounce back to the previous closing price. And then if that reacts as a resistance, then we will see a crack of that prior low if it reacts as a resistance. If you see the previous closing price ripping back up, reacting as support, then it's going to start to spike to that 369 to 371 zone. So those are your all key make it or break it levels. 371 to 369 resistance zone, 360, 682 make it or break it previous closing price, reacts as a resistance bearish move, reacts as support bullish move, and then your gap fill play at 357.63, right? And we're using overall like 1 point. If SPY moves like $1.50 against us, then we get stopped out of the contracts. That's like the most we're absolutely willing to risk on these. If you're doing same days, it's like 20 to 30% max. If you're doing further expirations, then it's lower. It's like, 10%, 15% max. Really don't want to go above 20% on more expensive contracts. So that's the overall thoughts. That's the overall analysis. In terms of true strength, for the bulls to continue this micro pump and for it to not be a fake out, they must stay above the previous closing price, and they must turn this, previous high into support. This resistance level right here at 367.82 to 369 for bulls to show strong strength. They need to stay above the previous closing price. They need to turn this previous resistance into support, and they need to break above 371.20. If it breaks above 370.20, the next overall level that the SPY is going to break out to would be right here at $373.20. That would be your next resistance level. If that reacts as a resistance level, you will start to see that rug pull in that previous closing price attempt. If that were to break out tomorrow, then it goes super bullish to 375, 377 zone. Those are the overall key levels. Also pay attention to this major resistance that the SPY has if it breaks out and goes super bullish. Your next overall key level for scalping puts would be towards 377 to 378, right? So in terms of breakdowns and breakouts, let's just quickly go over this one last time. If it struggles and fails to break out at this 371, then we'll be on track to go to 369. If it goes under 369, then we go to previous closing price 366.82. If that breaks down, reacts as a resistance, then we go to 364. If that cracks, then it's a bloodbath to fill the gap. In terms of let's say it bottoms at the gap fill level. Say it bottoms at 357.63 and it looks bullish. Then that's where you'd want to be scalping calls, right? And then in terms of if it were to break out the channel, say it's looking strong, it's holding above previous closing price, it's holding above resistance levels, it's pushing higher, it's forming strong support at this previous resistance at 368 to 369, it's breaking above 370.20, it's looking strong. Your next best level, it will be on track to go to 373.20, which is a lot of resistance, which is key make it or break. And if it pushes above that and looks bullish, your best level to play puts from there would be this 377.39 level. So those are all the keys that I want to mention with SPY. You got a lot of resistance here towards 373 and a lot of more resistance at 378. So those are all of our key levels: 378, 373, 371, 360, 682 previous closing price, 357 gap fill level, also the support in between 364. That's the overall thoughts. That's the overall analysis. So just remember, we are scalping these at the key make it or break it levels, best setups at the best prices. And in terms of our targets, our target is the next level. So if it's looking bearish at 371 and I scalp put, the next level down overall would be like 369. That's where I look to take profits, and then I could trade the next level if it's forming lower highs and looking bearish. Rinse and repeat. I consistently trade the levels, right? Obviously the higher the better for short, and the lower the better for calls. Use confirmations. Once you get the confirmation, wait for it to go back to your confirmation price. So once it's confirmed bearish, wait for it to spike back up to the price, to the best price where it was supposed to be confirmed bearish, right? Use confirmation first, then wait for it to retest, and then enter the puts on the double top of the rip, enter the calls on the double bottom of the bounce. That's how you do it. Trade the best setups at the best prices. Those are my overall key levels. If you do want to be a part of Traders Society, that's going to be the first link down below in the description. All the information is explained down there if you'd like to join us. With that being said, make sure to subscribe to the channel. I will see you guys within Traders Society tomorrow.